Hi, I'm Elisabeth Dawson, and you're listening to our show, Ways to Love Your Money. We're so glad that you're joining us today. Again, one of the main reasons why we have this show, it's based on our inspiration from the book that I wrote a couple years ago now. It was published last February in 2018, and we can't tell you how much excitement it's been because Wealth by Design has really started this show. It started the radio show that we had, and it's done so much more to help people have a better understanding about having a relationship with their money. Ways to Love Your Money is not about how you can go out and spend it. It's really about how you can respect it. So how do we make this all work? One of the things that I want to talk about today, and we have a great guest that's going to be coming on, and we'll talk about their thought process about this, but it's what is your relationship, or how well do you understand Wall Street? Most people, when I have the opportunity to sit down with them, they don't really know what the structure is, and they don't really understand Wall Street. But gosh, if you think about it, just like we've said on previous shows, most people want to put as much money as they can to purchase their primary residence. And then the second piece is that they're putting as much into their 401k or 403b or their IRA, whatever that might be in their retirement account, but on a pre-tax basis for a very long time in the future, and when they can actually start to use it at the earliest age today based on law, 59 and a half. So if we have someone that's 27, 37, 47, it's so many years ahead, right? But if you don't understand Wall Street and you're putting all of your money into that position or that bucket, and you don't really understand what's going to go on with Wall Street, you're going to have some trouble along the way. So it's not that it's a bad thing to accumulate money in. What's bad about it is that when the market does shift and change, how can you actually survive from it? So what I'm talking about here, and there's a brief explanation of it in Chapter 9. So I would actually refer you to go back to Chapter 9, which is page 71. It's only a few pages, so it's going to give you a little bit of a nugget, so that you have a better relationship with the understanding about how Wall Street works. So again, let's ask that question. How well do you understand Wall Street? Most people that I discuss this with, they say, I have no knowledge of how Wall Street works. Well, believe me, Wall Street understands that, and they love the fact that you're putting money into investments that you really don't know what's going on. Again, as money's making money, it's great. As the economy's doing fantastic, it's doing great. But at the end of the day, what ends up happening is when the markets start to shift and change and crash, if you will, what we call a fatal fluctuation, then the average consumer is the one that suffers. So think about this. If you have a $100,000 account, okay, and here's I'm going to go right here, and it's a steady $100,000 account. And let's say you are in a position where, like the average consumer out there lost between 50 and 60% in 2008. What would happen? Well, now our 100,000 goes down to 50,000, right? Would that be a bad day? 100% that would be a bad day. But if you're young and you're accumulating money at the same time and you have many more years to go, people are told, don't worry about that because your money will come back. Well, it's the time it takes for that money to come back. And it's the costs, fees, and expenses that are associated with that money coming back. So it takes you far longer. If you haven't done something like a risk analysis of where your portfolio is, and you've never heard that statement before, you should have a very common knowledge and relationship with what risk analysis looks like in your portfolio. Because you want to know, how long does it take for my money to recover? And it's not about just the rate of return of what that money has had. It's the rate of loss and how long it's taken to recover from that loss. So that's why they call, between 2001 to 2008 the lost decade, because it took people anywhere from 10, 12, 13 years for their money just to get back to even if they didn't put another penny into it. Now, if you were putting money into it along the way, and you're putting more dollars into it along the way, they call that dollar cost averaging. So as it's going down, you're basically putting dollars in, and then when the money goes back up, then you're actually, buying at lower prices, then starting to buy at higher prices, but then everything's kind of growing at the same, market value at that point. Now, if you're not too afraid to stay in it, you stay in it. But if you need to course correct, how do you course correct the right way? So when we look at a risk analysis, we want to look at what the losses are. So losses hurt you more than gains help you. I'm sure you've heard that from me on this show. Well, what kind of losses? Well, can you afford a 50% loss in your future? You need to see what your investments have done in the past to dictate what they might do again in the future. So let's have a bigger conversation about this and get you more knowledgeable about Wall Street. And I'm sure you're going to have a lot of questions for me as time goes on. So reach out to me. We'll be happy to go over them with you. And if you want a risk analysis for your portfolio, we'll take a look at that. And we'll show you where you have embedded risks that could actually derail you from accomplishing your goals. It should be goals based. So if your goals are to be able to retire at 40 or retire at 50 or retire at 70, it doesn't matter to me. It's based on your goals. But if your investments are not allowing you to be able to achieve those goals and dreams because of cost, fees, and expenses, because of fatal fluctuations, then let's make sure that no matter what occurs, that you can actually be on a footing going forward that is much more successful than, let's say, maybe your average friends out there that think that they know it's going to happen, that everything's moving in the right direction. Again, everything's great when the market's going up, but when the market starts to go down or we have some kind of craziness in our economy, people get nervous. So take that to the bank, and hopefully you'll get a copy of the book, Wealth by Design. Go to elisabethdawson.com, and that's Elisabeth with an S. And you can click on the button, and it'll take you right there to get the book. You can even listen to me if you want to listen to me some more on an audiobook version. So we look forward to hearing your feedback. And again, stay tuned. We have another great guest today. And I think he's going to tell us a little bit more about the relationship, about how Wall Street works a little bit more. So stay tuned. So glad you stayed tuned. I have a great guest here, Eric Kuhns. I'm going to let him talk a little bit about what it is that he does and how he represents people, but really he represents investment advisors like myself. So without further ado, hi, how are you?
Hi, Elisabeth. Thanks for having me on.
Good. I'm so glad that you're here. What a fun day to be here.
Absolutely.
So we've been talking a little bit about how well do people understand Wall Street today, and I know you have a sideline of how you believe people need to be directed and how they need to be educated. But tell us a little bit about the company that you represent, and I know you're here to support more knowledge and education. So 5 seconds or less, do whatever you want to do.
Sure. So the company I work with is called the Pacific Financial Group. We are a money management company, or a wealth management company that partners with independent advisors to help them manage their clients' assets.
Okay.
So the value in an advisor comes in the form of support and guidance and planning, but many advisors feel that really that's their specialty of value, and they need a partner like us to help them actually manage the individual client.
So these investment strategies, we really call them what we refer to as private wealth strategies. And in your world, it's about really directing into the 401k or 403b or TSA or TSP type of markets where companies that have those, there's sometimes an opportunity that we can actually work with those employees where maybe they wouldn't have had great financial education or advice in front of them to be able to really get entree to these types of investments. So I didn't mean to just explain that for you, but I would love to know the philosophy behind the company and why they actually chose to go down that direction, which is so unique and different.
I'll give you a personal story.
Okay.
Prior to my entree into the financial services business, I spent about a decade working in the airline industry.
Okay.
I was fortunate enough to be on the corporate side of the business where I would travel around the country and often would end up at various meetings of staff and other employees. The one thing that I always remembered about these meetings at the airlines was that we would sit down around a conference table, and prior to the meeting starting, there was always a conversation. What are you doing in your 401k? What are you doing? How are you invested? People were hungry for information. They were hungry for help, and there wasn't a resource for that. Now, mind you, this was over 20 years ago. Things have evolved significantly since then, but there still is a need for that guidance and that help. Because we didn't have access to that, we essentially, as individuals, we would be attracted to whomever seemed to know what they were doing the most, whether or not that was suitable for our personal situation or not. Okay. So anytime that there was somebody who said, I know what I'm doing, this is what you should do, we might say, okay, great. If they know what they're doing, I'm going to follow their lead. Right. It's human nature. It's the path of least resistance. But ultimately, I realized early on that while that might work for some, there are others who really want more personalized help and more assistance than they were getting from their colleagues who really, in my case, our job was working with airline passengers, not with investments.
Right.
had we known or had we had the resource to work with someone like you,
Right.
I know that I would have been in a better position today than I am now, because I would have had the resources of your services.
Well, I mean, that's a huge testamentary, piece that you're talking about, because I think people that are in corporate America or working for a company that has a 401k, they have no real knowledge about, what investments should I choose, what background do I need to know about that investment, how do I make most sense about this, because we ask everyone, how well do you understand Wall Street? I would say 99% of the time when people come in, they have no idea, but yet they're putting everything that they possibly can into a savings account because they think that that's where they need to put it for retirement, right? Maybe they're getting a company match, maybe they're getting a profit sharing contribution, something like this, but they don't necessarily know the responsibility is all on them to be able to make the best financial decisions.
That's right.
So I was back in retail world for years too, and they just said, oh, put the money in, but they didn't tell me how, when, why, or what, and what was I doing it for. They're just saying, oh, you won't miss it in your paycheck. Oh my goodness, it's the worst selling tactic that an HR company can tell you. But I find that when I've talked with you over the years and what we've been able to do for people in their retirement accounts where maybe they thought, gosh, I can't get any help anywhere, that you have programs that will actually have them have better success. And when the market gets really crazy, you actually still moderate and you can move forward. So I think it's a powerful piece. So what are you seeing? What are you hearing from, I guess, your clients, which are investment advisors like myself, and the company that you work with that is so powerful? I mean, you've got a female at the helm, which I love. And what are you really hearing from really the consumer interaction that these investment advisors are having, these fiduciaries are having with their clients? Anything in particular?
I think there's a lot of anxiety right now because we've been in such a sustained return or sustained bull market, and there's a lot of uncertainty. And ultimately, I think it all comes down to a lack of confidence by the average investor on knowing what to do next. What do I do if and when X happens? And again, the value of working with an advisor is the fact that you are going to help create a plan and hold each other accountable. Just like anything else that you have a long-term goal for, it's often nice to have somebody to help hold you accountable to that goal. Check-ins along the way, keeping us from being our own worst enemies and making those mistakes. So it comes down to managing behavior. And I think that that's what a lot of advisors that we work with are finally understanding that, yes, you have to have performance, right? The returns have to be there. But equally as important on the return side is the behavioral management side. It's actually, it's imperative that the end client, the investor that we're working with, sticks to the game plan that you and they have set together. And if changes need to be made, you have the ability to make those changes with them. But left to their own devices, many studies have shown that people end up making mistakes along the way, and that can be extremely expensive. It's most important now, as I started out saying, because the markets have been in a sustained run-up in the last 10 years, we're entering, in our opinion, in what we think could be a sustained period of a lot of up and downs in the markets. And this is when people start getting a little bit queasy, right? So they're not sure what to do. And one of the worst things they can do is react on their emotions. And ultimately, between the two of us, we're going to help keep them from making those mistakes. And that behavioral side of it.
It's hard to navigate through emotions, isn't it?
It is.
Yes, and investing in money in general is so emotional for people. Whether it's anxiety, worry, or complete anger because something may have happened to them in the past. But I kind of call it too when we're in the market, we're heavy in the market, we're not seeing the signs. I call it a little bit of an amnesia. Can another 2008 happen? Can another 2000 to 2002 happen? It's kind of in our core structure of Wall Street, right? Anything can happen. You just don't want to have it happen the day before you're getting ready to retire, let alone if you're even in your 40s or early 50s and you're kind of going through this stage where you don't know if you're going to retire. Can you retire by 62? Can you retire by 67? Or if you work for the government or a city or a county position and you're retiring at 55, or your teacher retiring at 55. I have a cousin that she's going to be retiring this summer. She's 55, young, and I look at that, and even the work that we've done now, prior to, she's gone through so many volatile situations.
Right.
And when we're retiring, we don't want to see, a pit, that we're going to go down into. And that's one of the statements we always talk about, that losses hurt you so much more than gains help you, even though we love the rate of return.
Right.
But if we can't navigate through those losses, we're kind of in trouble. How do we get through it?
How do you smooth out the ride?
How do you smooth out the ride?
Precisely.
Yes.
Precisely.
Yes. So I know the impact that we've been able to partner and do things with people because they didn't have those resources. I'll have sometimes people where I'm not trying to suggest a particular company here, but they might have Fidelity or T. Rowe Price or Vanguard, and these are these huge, huge companies that they're not necessarily working with them to be able to navigate through those losses and gains, but that's maybe all their choices are. We talk about a self-directed IRA. Can we do that? Can we do a self-directed 401k? I don't think anybody realizes that you can. It depends on the company that you're with and if there's an agreement, of course, to be able
Right.
to do that. But I think it's wonderful that we can actually help someone that's in their building years to navigate away from maybe some of the risk that's associated with how they're investing their portfolio today,
Absolutely.
and give them a little bit more knowledge about how Wall Street does work,
Right.
so that they know.
So people that we've met recently they don't understand that there is wealth development and wealth management.
Okay.
Now, your average 40-year-old probably might not think that they are suitable for wealth management,
Okay.
because they're in their wealth development phase, right? They're
Yes.
growing their assets,
Yes.
they're saving, but they might think, look at their account balances and say, oh, I don't qualify to work with someone like Elisabeth.
Right.
And yet, in reality, that's not the case at all.
Right.
Because they are growing those assets, it's more important than ever that they have someone like you to help them with, making sure that they are invested correctly. Because for those of us who have been through the 2000 dot-com implosion, the 2008 market, the recession, the last thing we need to do is make those mistakes along the way that will
Right.
cost us more in the long run.
Right.
And a lot of times, a lot of people that I've run across they're too conservative at this point, right? So they know that they need to, they're gun shy, they want to protect against whatever
Sure.
is coming down the road,
Sure.
and yet at the same time, they're also being their own worst enemy by not taking enough chances in there, because they're young enough, they might still have time on their hands. I think ultimately it's the confidence. So many people, they lack confidence in what they're doing. And it's not because they don't have the abilities to figure this out on their own. This is the biggest flaw of 401ks today, is that they design them to be simple nowadays to try and make them as easy as possible. And yet, even with them being simple, people still don't have confidence that what they're doing is going
Right.
to get them to and through retirement,
Right.
which is why it's so important to have a sounding board and an advisor to work with, because it's that confidence that you and we are going to provide them
Sure.
to make sure that they know that what they're doing is going to make it.
Well, I think it gives them a roadmap, right? Gives them a
Yes.
little bit of a game board to kind of figure out, hey, what does this look like for me? Because you can't go to your HR and say, hey, can you help me with my investment choices? We had a client recently say that they went to Fidelity because they had a 403B at Fidelity, and she tried to sit down with, the representative, and he could answer nothing for her. And she goes, well, gosh, I thought that all financial advisors are the same. We are not created equal, that is for sure. That is 100% for sure. So again, if you want really strong advice, you have to seek someone that has that profession behind them that can really specialize on this, on these specifics. So let me put you on the spot. What's a fun fact about you?
A fun fact.
Yes.
That is putting me on the spot.
Answer
a fun
if you will.
fact is that I graduated with a degree in hotel management and eventually hope to own my own restaurant and hotel.
Okay. Is that
would be-
still on the wish list?
Down the road, if I work with the right advisor, perhaps I can actually.
It all works. It's all well-rounded,
That's right. That's right.
Well, good. I'm so glad that you've been on the show. I hope you'll come back again in the future. I'd love to know even things that come up in the future so we can share it with people. But again, thank you so much for tuning in right now. Eric is an incredible resource to us, the Pacific Financial Group. Again, this is not something that they advertise for. They kind of have that entree through investment advisors like myself, but it has been an incredible tool for us when we're working with someone that has a retirement account and they're years away from retirement. But it gives us another choice to be able to have another resource to make it more successful for them. Again, I want to refer back to the book, Wealth by Design. It's been an incredible empowerment for people when they actually do read it, just because of the fact that it simplifies a very comprehensive approach about how to have a better relationship with money, but more importantly too, giving you a little bit more knowledge and education about how well do you understand Wall Street. So most people that listen to our show and most people that come in to see us for the first time, they have no idea how it works, but they're just hoping that it's the magic bullet that gets them ahead. So let's get a better relationship with money. Let's get a better relationship with Wall Street so you're not taken advantage or led down the wrong road. And again, if you want to do a risk analysis to see what your portfolio looks like from here and now and what the history might indicate what you might be looking for in these like bumpy times ahead, we'll be happy to work with you on getting you a risk analysis of your portfolio. So you're welcome to give our office a call at 619-640-2622. We'll set you up for that. We'll give you the documentation that we need to see so that we can do a good job for you. And if you have your 401k out there, or your 403b, or your TSP, or your TSA, and we have the ability to work with you through a self-directed account, we'll be happy to work on those things or just give you the knowledge so that you can seek out that information for yourself. So again, reach out to us when you're ready. If you have questions, you might have many questions about this topic, you're welcome to email those to questions with an S at elisabeth.dawson.com. Thanks so much for tuning in. Hey, this is Elisabeth. I'm here. I want to find out what you think about some of the people on the show today. I think it's a great opportunity for you if you would like to be introduced to them, as well as even be a guest on our show too. So give a call at 619-640-2622. Let them know that you were listening to the show and that there was a guest that you really would like to be introduced to. Or again, give us some feedback. We'd love to know what you have to say about the show. You can even email us at questions with an S at elisabeth.dawson.com. We'd love to hear what you have to say. We want to know who you want to hear and who you want to see and who you want to meet. So again, stay in touch with us. Give us feedback. We love it. The information provided in this show is for informational and educational purposes only. This show is not investment advice, nor is it intended to address the financial needs of any particular viewer. The opinions expressed on this show are not intended to be an endorsement of any particular investment strategy or service of any other kind. You must make an independent decision regarding investments or strategies mentioned throughout the show. Before acting on information in this show, you should consider whether it is suitable for your particular situation and strongly consider seeking advice from a financial advisor.